Welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
And I feel like it's been a really long time since we talked, David. I've been having podcast withdrawal.
I know. I took a little extra weekend because we couldn't record on Friday. We're recording on Monday instead because I went to a wedding in Chicago. But yeah, it feels like it's been 10 days. It has been like 10 days or whatever since we recorded.
But then it occurred to me that it's okay because a lot of our listeners do tax or are involved in tax and prepping for it. And we all know October 15th is the big deadline. So people don't have time to listen anyway. They're busy working. And I've noticed that social media has been like very quiet the last couple of weeks. I've heard that the Tax Cuts and Jobs Act delayed a lot of filing until the extended deadline. And so a lot of people are like just slammed.
So this extended deadline's worse than it has been in previous years.
Yeah, there was even a story in the Wall Street Journal about how the TCJA has made tax season end on October 15th this year, like, and interviewed a bunch of CPAs. And I mean, you know that it's bad when the normal pain that we all feel as accountants, like, gets into the Wall Street Journal as a top story that surfaced in the regular, Wall Street Journal feed.
So I've got some articles. We have lots of small articles. Lots of things have been happening. App articles.
And before we get to the articles, though, I've got an announcement.
What is this?
Which is that I have a new job. As you know, folks who are regular listeners to the show may know, I left Flowcast at the beginning of September, and I truly intended to do consulting, stay independent, work on the podcast for a little while. But then the magic of podcasting is I mentioned that I was available, and the folks at Jirav, Jirav, are listeners of the show and reached out and said, "Hey, Blake, we are looking for somebody to help us with marketing. And we love the show and we want to talk to you." So I was thinking, okay, well, maybe I'll do some consulting for this company. And then I went up to San Francisco and I met the founders and I fell in love. David, it was romance in San Francisco. I really got to know the team and I'm really excited to be joining them. I'm going to be their director. Well, I am their director of marketing and I just got through my first week.
Congratulations. So you moved from one app to another app now.
I know. Like I feel like now that I've left public accounting and gone into software, I'm going to get stuck here.
In the app world, yeah.
In the app world, like you.
That'd be like me jumping into like accounting firms. Like I'm like, yeah, I'm going to start working for accounting firms.
Oh my God, David! If there was an accounting firm that had the vision to hire you, I think you could do a lot for them. But that's here's what I'm really happy about is that Flowcast was an application primarily sold to corporate controllers, so it was kind of outside of my home turf, which is the CPA world or accounting and bookkeeping, small business accounting, like the world of QuickBooks and Zeros,
advisory services, like that kind of.
Right. Yeah. Flowcast was increasingly more in the NetSuite world, the Oracle world, SAP world. And so it's really great to be back in the world of an app that is part of the QBO Xero ecosystem that is helping CPA firms move to advisory services, which is what we talk about all the time on the show, right? So like, how could I not take them up on the offer to help do that? Help basically as part of marketing, create educational content that's going to show CPAs, accountants, bookkeepers, how we can move from being historical looking to being forward looking. Oh, and by the way, this app Jirav lets you actually do that. So that's exciting to me.
Cool. It would be great to hear about this as you go along.
But enough about my gig. What's new with you, David? Or what have you been reading about?
There's lots of news. Let me see here. Why don't we jump into what I think is my most favorite story of the week?
Okay.
I think. So it has a weird title. It says Veem introduces Xero for invoicing.
Yep. I saw this because I'm a Xero customer, right?
So it's a horrible title of the article, but essentially like there's so much yes here because I'm a firm believer in on both sides of the fence, AR and AP, right? On AR side, if I send an invoice to a customer, I want that customer to have 25 pay buttons, right? Pay with Apple Pay, pay with Google Pay, pay with any of those, PayPal, whatever, right?
As a marketing person, I'd say just have one button, but say pay however you want.
Okay. Possibly like that from UI.
One call to action. Yes.
Yeah. So people can pay me in their preferred method. Well, on the
Yes.
same side, as a business owner, I want to pay my vendors. And sometimes one vendor wants to use Veem. Another vendor wants you to use Billbox.com. Another vendor wants you to use this other platform. And so what they've done now is inside of Xero, when you have a bill to pay, and the corner of Xero, there's a button that says pay with Veem. So you don't have to like leave Xero, go out to Veem, pay your bills in Veem. You just do it from one spot.
Wait, so you're telling me this is not just for receivables? I can also pay my bills inside of Xero with Veem?
Let me go relook at this. It could be me being confused on what I'm looking at in Xero.
So I saw the AR side, right, where now you can add Veem as a payment service and receive payments.
Oh, this is on the AR side. Okay, got it.
Yeah. Now, what you were describing is the holy grail of bill pay, which I've yet to see anyone do. But hey, Veem, if you are listening, that's what people really want. Although Veem will pull your bills into Veem and then you can pay them from their app. But how cool would it be if a button popped up inside of Xero or some Chrome extension allowed you to pay your bills directly from the bill in Xero and you didn't have to go into Veem to do it?
And that's, I mean, initially that's what I thought this did. And that's what's to me is the most exciting because, and actually I think it's in QuickBooks and Zero's best interest.
Yeah.
Because the more payment options you put in product, you're going to get a little piece of that action. And then it's in QuickBooks and Zero's best interest to get everybody to pay their bills with e-payments and not write checks, paper checks.
So I feel like the reason this doesn't happen is because it's really hard to get a company like Xero or QuickBooks to put your button in their app. First of all, they have to change their UI. They have to figure, you're going deep in their turf, and that's not easy to do. So here's my workaround. Like, I would love, if you're a developer and you're listening, tell me if this is crazy, but what if Veem or Bill.com or any of these AP apps had a Chrome extension? So one of these plugins you get for the Chrome browser that you would sign into, and then when you're looking at a bill in Xero, it would superimpose on the Xero user interface like the Veem Pay button. And I know this works because there are lots of apps that integrate with Gmail this way, and they can like add into the functionality without Google having to build something. So somebody should do that, right? Like that way you can layer on top of Xero without having to work with them to try and get permission to go into their app.
Yeah. I think the closest thing I've experienced to it is checkbook.io. So I use that inside my QBO. Yeah. And so I just do the pay bills. So I pay bills and I just cut a check, but I say to print. And what it does, it watches all the checks that I have marked to print. And then it'll cut those either as a physical check if it needs to mail one, or in most cases, it'll just do an ACH to whoever I'm paying.
Wait, so you mark it as to print in QBO, and then in
QBO,
that's how it syncs, and it knows what you want to actually send?
Exactly, because it's basically, it's watching that to print status, and then it knows, okay, I'm going to send all these off. Yeah.
But you still have to go into checkbook.io to actually process it, right?
No.
Oh, it just knows.
It just watches that. Yeah, which is so that's like the closest thing I've kind of seen to that. Mm-hmm. But what if 3 apps create that as their trigger? Right? Now I'm going to pay a bill 3 times. So it's not, I think it's the right spirit. I don't know if it's a perfect execution. And I think that's the perfect execution is I can set a preference inside of QBO or Xero of my preferred payment method, or I set it up per vendor. So if I'm paying a bill to vendor X and they use Bill.com, the button just says pay with Bill.com, and I click it. And when I'm on a bill from a different vendor, maybe it's you and you like Veem, I'm going to click you and it's going to have the Veem button and I just pay it through there. Why do I have to go to another UI, another app, and another browser tab to accomplish something this simple? I'm just paying a bill.
Yep.
Kudos. It's my favorite. It's the favorite thing I've seen this week. I got very, very excited about this, obviously.
Well, other big news was the mileage tracker that's now in QuickBooks Online.
That is big news as well.
Right. So this was the feature that was available in the self-employed version, but not in the regular big boy version of QuickBooks. So now they've added that in. So have you tried using it, David?
I have not tried using it. I've always heard a lot about the self-employed one. Like Intuit figured out ways to have it automatically run in the background and not use up your battery on your phone. There's lots of smart things they've done with it using the GPS and things. Yeah. But I have not used it. I did get activated in my QuickBooks Online app, but I have not taken a trip yet. So I should. How do I just create a fake business trip and try to test it out?
Yeah, charge me for it. And on the same note, our sponsor, BQE, or former sponsor of the Cloud Accounting Podcast, thank you very much. They have also added mileage tracking inside of BQE that uses GPS and all that stuff. So it seems like a lot of solutions, practice management, GLs are now adding in the mileage tracking, which just makes a lot of sense, right? Why use a separate app for something that small, I suppose, right? It's a feature, not an app.
I think it's the same for like even the receipt capture in QBO, right? In the grand scheme of things, it might be good enough. It's the same thing with mileage, right? If I'm taking 2 or 3 trips a year as a business owner and I need to track that, going and getting a separate mileage app just to track 2 or 3 trips doesn't make sense. But if I have a fleet, right, and I have lots of people driving and lots of employees, maybe it's not the best fit, right? But everybody's very excited about this. And I think I saw it's even starting to become available in Canada. And so people are excited about seeing it up there as well.
Well, they're always very excited because they get features like 3 years after us.
I don't know if it's that long now. I don't think it's that long now.
Not as long. But
I think we got some more Intuit news. Oh, good.
Yeah, let's talk about the Intuit news.
So other Intuit news. So remember last year at QuickBooks Connect, we were talking about, hey, instant payments. Like that was the theme. Instant payments are coming. Instant payments are coming.
It was, yes. I recall that.
I think that was my prediction on our year 1 episode or January 1st episode, whatever we want to call that, right?
It was your number one prediction.
Yeah.
That this is happening.
This is happening. And so now Intuit and VISA are now launching an instant deposit feature. So they're joining, all the other players that are starting to get out of the way. And for small businesses, they're going to deposit that money in as fast as possible.
So there's a fee for this again. Seems like that's why this is happening, right? Because Visa, Intuit, they want to make a little bit of money on this financial services fee. So it's 1%, and then you can get the money. It's like immediately, right?
What is the?
It says instant deposit. So I hope so. Okay. So you can receive next day deposits. Instant deposits available within 30 minutes of a transaction being approved.
Wow. So this is even more than less than 24 hours. This is very impressive.
Yeah. So that, for 1%, that might be worth it for a lot of businesses to have it immediately. Cool.
Oh, and then some other Intuit news that I saw this week that came out. The terms of service changed for QuickBooks Online.
Yes. And I don't know where you saw it, but Nina Casey gets a thank you from me for sending this over. She noticed the new terms of service having language about QuickBooks Live. Is that what you saw too? Exactly.
That's what my note, I was just to myself, I was like, this means QuickBooks Live bookkeeping is now officially real, right? It's in the terms of service. It's no longer a marketing test. It's no longer anything else. It's in the terms of service.
And Nina called out a great line in these terms of service. She said that she liked, quote, "The scope of the bookkeeping services may be limited and some services may not be included as a part of the QuickBooks Live services, both of which shall be determined by the live bookkeeper," unquote. And Nina says, so basically they're saying, buy our product even though we don't know exactly what we're doing. Actually, she said, I added that myself. She said, even though we don't know exactly what we're selling you. To be completely correct. So
could you imagine that the meeting that this is happening in, right? Like the lawyers are trying to write the terms of service, and you have a product management team that's just like, we don't really know what it is yet, but you got to this back and forth. That's kind of entertaining. But yeah, the big takeaway is QuickBooks Live bookkeeping is real. Like that is the big takeaway in that. And I think they rolled in some T-sheets, terms of service, and some other things. But the big one is for sure it is now QuickBooks Live bookkeeping. And then one more little piece of Intuit news. I don't know if you saw this or not on the social media, but I think this was Thursday. Maybe it was Friday morning. I think I saw Rich Priest is leaving Intuit.
I know. So our listeners who have been following QuickBooks Live know Rich Priest well because he's been like the voice of Intuit when it comes to QuickBooks Live.
We had him on an interview about episode 80, mid-80s there. We interviewed Rich regarding QuickBooks Live at Scaling New Heights. And so I think Rich was at Intuit easily 17 years, maybe pushing 18 years. He was there for a very long time. There's not a lot of news, what's next or anything like that. But it was just, I saw it on the socials, and then it was confirmed by some Intuit employees as well.
Yeah. So no word on where he's going yet.
There's nothing. Yes. Not unless it's buried in like a comment thread somewhere on social media, but I have not seen anything.
Got it.
So he'll be missed. Always enjoyed talking to Rich.
Yes. He was just so well spoken. He had a great radio voice too, which made him a great podcast guest.
It made me sound horrible. I know. It was great.
So that's it for Intuit, right? We got more app news though.
Yeah, there's lots of apps news, lots of different things happening.
So much.
Jump in.
So much. Okay, so I don't know if we covered this on a previous episode, but do we talk about how Paro, P-A-R-O, raised $10 million?
Not specifically this round, but I feel like we've spoken about them once before on the podcast because they're playing middleman, kind of a matching service, almost like not temp agency is not the right word, but they're like a temp agency that's using AI to match really higher end professional accounting jobs, correct?
I really like how their representative explained it to Dan Hood in this Accounting Today article. So here's how Paro works, according to Alexa Lemo. She's their business development manager for partnerships. She says, quote, say client A has a need for a fractional controller. They have a couple of staff accountants, a bookkeeper, and they're looking to get the CFO out of the weeds. We plug in a controller for 15 to 20 hours a week. The company gets a free call with one of our financial consultants for a needs assessment. Then our experts run a search on our platform and they come back with the best 2 or 3 matches. Then it's at the client's discretion to speak to all of those freelancers and interview them and talk about the scope of work. And we have a dedicated talent management team who are in constant communication with the client and the freelancer to ensure success. So this sounds very familiar to me. You know who this sounds like to me? It's like the next generation of Robert Half, right? That's who they're disrupting here.
Okay.
Because really they're placing financial professionals in, part-time contract work positions. It seems primarily for corporate teams, but also can be CPA firms.
But they're using tech to do it, right? To make it more efficient.
Yeah, exactly. Faster. It's not like when I hired somebody at Robert Half and I did this. I had to go to the office and I had to meet with their person. And then I had to go in person to the office and meet with all of the bookkeepers I was looking to hire. Not particularly efficient. And Paro does this all online. So yeah, they raised $10 million and it looks like that was from Sierra Ventures, which led the round of financing. Existing investors include Revolution Ventures, KGC Capital, and Tom Williams. So congratulations to Paro. And I should note they are a Chicago-based startup. So nice to see another startup coming out of Chicago, where I went to college.
True. I was just there this weekend. Very nice city. A little cold, a little windy for me, but it was a very nice city. I feel like I've only been to Chicago for social occasions, so it's always a good time, I think. For my impression of Chicago is probably higher than it should be, maybe. I don't know.
Well, it's definitely better if you're at a social occasion drinking, because that helps you stay warm. Yeah,
that's true. That's true. I have a quick, small news on an app I kind of saw or discovered, and the reason I just noted it, it's an app called easieraccounting.com. Had a press release. They're going to offer a 60-day free trial of the company services. And obviously, I see something like that. I start poking around. It's another accounting firm with engineers, bench, botkeeper,
another one,
scale factor, another play that's similar to that. Yep. And so it's another one, and they're offering 60 free days trial, but it's just another one, right? Like I think we're pushing 10 of these companies now, 12.
Yeah.
And there's going to be more. So it's just something to keep on the radar. So
is there anything that makes Easier Accounting different than any of the other bookkeeping, accounting startups, or is it really just like the same thing? I guess it's hard to tell, right? It's hard to tell.
I feel like it's being this one's another one that was started. I don't think he his background was accounting. Mm-hmm. He was a small business owner. And he could never find accounting firms that were easy to work with, or they were affordable, or provided good communication.
Yep.
Right. And then as soon as they found a CPA that was good, they were too expensive. So he decided to try to attack this himself.
And I should say that I don't mean to be, I don't know if I come across this way, like dismissive of this. I think this is awesome. I think that this is the future for accounting services in a lot of cases. And congratulations to Easier Accounting. And I'm just looking at the website to see where they're located. It looks like they are in St. George, Utah. So kind of like in between Las Vegas and Provo, maybe a little bit closer to the Nevada side.
It doesn't, they don't talk a lot about as like a lot of like AI. We have more AI and we have a lot of engineering stuff, not as much as some of the other players, but they definitely are trying to offer a low cost solution for small businesses. But it's another player that's in the space, and just keep an eye on them. Just like all the other ones.
Keep an eye on it. What else is new? Oh, Expensify. We got to talk about Expensify.
Yes.
So I love these emails that I get from David Barrett, the founder and CEO of Expensify. He has a very unique approach to marketing. I think Expensify has a very unique approach to marketing. And so the way that he announces new features is with a long, very long, all text email, which, normally you get these emails that are like all beautiful and graphics. And he's just like, this is what's happening. He even has a TLDR at the beginning, right? Too long, didn't read summary. Yep. Very nice for us. Basically, the news is that Expensify has launched, quote, the world's smartest corporate card with market-first daily settlement, unapproved expense limits, and real-time compliance features that enable the highest spend within the safest limits and the greatest e-receipt coverage of any corporate card. It's available now to Expensify users. So basically, like the Brex card, the Divvy card, now you can get that from Expensify.
Yeah,
but it's different.
This is that big, the APIs, right? MasterCard, Visa, they've opened up their APIs. A lot of people can spin up and build their own cards. I mean, I think I saw Receipt Bank has a card coming out. Like, there's just a lot of these companies that are putting out their own credit card now, which makes me kind of think like, oh, Intuit just got a big biz dev deal with Visa for those instant payments. Mm-hmm. When is the QuickBooks card coming? It feels like it's kind of a natural
it's going to happen
progression of thing. What's interesting, like I love about Dave's emails, is he really gets into the backgrounds on their decisions.
Yes, he talks about the reasoning why they did it. And did you realize? Like, I remember hearing this a long time ago, but I'd forgotten about it. Expensify started as a corporate card.
Yes, that was the original play. Yep.
Yeah, that was the original, but it was early. It was too early, right? So he pivoted to expense reports because that is something that's a lot easier to build, a lot easier to scale, which they obviously have done, right? To incredible success. I honestly, like, they are we all know about them in the software world as being successful, but maybe not. Maybe everyone doesn't know, but like they get, companies to sign up with like tens of thousands of users, and they like don't do any traditional marketing. Right. Or they do very untraditional marketing, I should say, because of the like grassroots nature of how their app works. And I actually wrote a whole blog post about why Expensify is the Slack of accounting, because of the way that they get new users. It's very unique. I don't know where I was going with that, but they are definitely they take a non-traditional approach to everything. And so same thing with this new card.
How are you familiar with their e-receipts feature?
Oh, I love it. I mean, do you know how it works?
Essentially, they you don't have to take a photo or scan or keep track of your receipt, right? They're recreating it based on the data from the transaction. Yeah.
So if it's under the IRS threshold of where you have to have a receipt, which is for most transactions $75, then they will generate a receipt for you based on the credit card statement description and amount and date and location. And they guarantee that will work in an audit, that the IRS will not deny your deduction.
And what's interesting, now that they're controlling the end-to-end from swipe to app to report, they're going to be able to, they predict like 9 out of 10 transactions now are going to have an e-receipt. So maybe the whole concept of tracking receipts at all, finally, because I think it was when they're marketing, right? Oh, burn your receipts. Like finally, maybe this can really truly happen now. The other part, there's so much in this email. I got it like 6 times. Like if you're on any, like, yes, I've signed up, I've tested apps, right? Like your email addresses get out there. So I've got it a bunch of times, but he had maybe you can recognize the paragraph, but when I read it, he was talking about how they really got in the room to talk about reconciliation.
Mm-hmm.
And nobody on the team could really justify the reasoning for doing it on a monthly basis. Like it made 0 sense. Can you know where that paragraph is?
So he says that reconciliation is a nightmare. And regardless of who's footing the bill, if it's not the employee, so basically employees don't have incentive to save receipts and make it easy for accounting to reconcile because they're going to get reimbursed anyway. And then the admin has to nag everybody and it just doesn't happen. So, I mean, the idea with the corporate card is that, and the e-receipts is that 90% of transactions, you don't even need a receipt. It can be reconciled instantly. And that's another part of what they're doing here is daily settlement. So essentially reconciling that card every single day instead of once a month. So there's all the charges that happen that day. Expensify tallies them up and debits your company bank account for that amount. And so you can reconcile on a daily basis, which actually makes your reconciliations a lot easier. That's kind of the core philosophy now of QBO and Xero, right? Is don't reconcile weekly, reconcile constantly, right? Daily, continuously. There's another word people like to use. So the benefit of that, which David talks about in this email, is that because you're settling daily, the limits can be insane. Basically, the limit is how much money do you have in your bank account? That's what you can spend. And they have access to your bank account, right? And to view your balance through the API because you've given them permission to do these ACHs and whatnot. So they can instantly adjust your credit limit. And yeah, so if you've got $1 million in your bank account because you're a VC funded startup, then theoretically, I guess you could spend that much on your credit card.
Yeah, which is similar to the other news that came out is Brex's announcements, right? So
I missed that.
Brex has a similar model, right? Like, hey, you have that money in your checking account, right? And then they adjust your credit limit based on the money in your checking account, right? So it's essentially, if you're a well-funded startup, your credit limit's unlimited, but you would never get from a real credit card company, right?
Right.
So they're solving a unique problem, right? Well, now they're taking it to that next level of like, why even put your startup funds in the bank? Just put them into the Brex. And so they're offering their own, basically, they're teaming up with Boston's Radius Bank.
Whoa.
And they're going to basically, they call it Brex Cash. So they're, again, it's another player getting into the bank.
So they're going to try and be the bank for startups.
So they're taking that same logic that you just said out loud about Expensify, and they're just applying the, like, why even keep it running in the bank? Just move this. Like, you're going to spend it all anyways. Like, just let's just run it through it so it's easier to get to and run it through the card. Wow. So that's a pretty big announcement. They're and again, it goes to these companies becoming banks.
Yep.
Why? Because the small business banks suck. So I'm really excited to get into an example of why small business the banks suck for small business. If you'd like me to get into that.
Why banks suck for small business?
Yeah.
Is this going to be a David Leary rant?
No, it's not going to be a rant. It's just going to be, we can get into this. This episode of the Cloud Accounting Podcast is sponsored by OnPay. Many times when choosing a payroll service, you have to choose between a new startup with a great app or an established company whose tech may feel a little behind the times. With OnPay, you get the best of both worlds. A great app from an established company that's providing payroll for over 30 years in all 50 states. OnPay is an easy-to-use full-service payroll with simple, straightforward pricing, and it includes all their features. Employee self-onboarding, HR tools, health insurance, workers' comp tracking, and 401k. And with an accountant's dashboard and partner program combined with best-in-class integrations with Xero and QuickBooks, OnPay is the right fit for all your clients, whether they have just 1 or 500 employees. They also handle all the complicated stuff that other payroll providers don't, like agricultural payrolls, including Form 943, multi-state payrolls, and employees with H-2A visas. I'm really excited to tell you that OnPay is offering an exclusive promo code only for the listeners of the Cloud Accounting Podcast to get 3 free months of OnPay payroll service for any of your clients that you set up by February of 2020. Head over to cloudaccountingpodcast.promo/OnPay. That is cloudaccountingpodcast.promo/ONPAY. And use code CAP3FREE when you sign up your clients. That is CAP, the number 3, FREE. And to be clear, you cannot get this promo anywhere else. It's only available to the listeners of the Cloud Accounting Podcast. So
give me the short version because we got a lot to cover this week.
All right, this could be a fast one. So it's Bank of America.
Fast rant starts now.
So this is Digital and Human. It's the inside of Bank of America's small business strategy. And this is an article that's in Bank Innovation.
All right.
So remember a couple of weeks ago, we talked about how BBVA Compass wants to attack small businesses, and they're creating 4 new APIs for developers to build awesome app integrations into. Mm-hmm. Well, Bank of America is kind of going a different route, and they've created their own app. So don't look at the article. Nothing else matters. Just look at the app.
The picture of the app?
The picture of the app.
Business Advantage 360, total balance.
Look who the app is designed for. It's in bank language. Credits and debits, not from an accounting or a small business owner's view of the world. They built this app for themselves. They are completely out of touch. Like, it's so bad.
Oh, because the credits and debits are reversed?
Yeah, and then they called out in the app like it's this great thing. Total credits, 78,000. Total debits, 30,000.
Well, that's how banks think. But because of that, that's how consumers think too. Non-accountants think in those terms, right? A credit increases your bank account.
This is your business advantage app.
Yeah.
Like they obviously do not get it.
Or this just represents the consumerization of the enterprise.
Possibly.
Making it super easy.
Possibly.
Make it super easy for people to understand. It is interesting though that it's showing this app that you showed me like has a cash flow projection. That's pretty cool. So you can see here's today, and then here's what I'm going to have 3 days from now. That is really interesting. I mean, I can't believe the banks don't do that already. Like project cash flow, because they know what we normally spend. They could totally do it. Yeah,
it'd be interesting how they're doing that. Are they just doing that based on the checks they have in queue, but they haven't actually cashed for you and deposited in your bank? It's not your available. It's really just a graph of your available balance.
Yeah, execution is everything, right? It depends how they actually do it, but like the fact that they're thinking about it is really good.
Yeah, and then they're going on to say how they're going to underwrite loans faster and all of these promises that because all the tech companies are beating them to this punch.
Yeah,
but I mean, instead of building an app, they should build APIs. That's my take on it.
That's cool. Well, hey, here's a connection. So Bill.com, right? They are opening up an office in Houston. This was announced. Actually, they did it last month. They had a ceremony with the mayor, Sylvester Turner, who cut a ribbon, and a proclamation from the mayor naming September 18th as Bill.com Day. So it was Bill.com Day on September 18th in Houston.
That's exciting. I don't think we've had an app that got their own day. That's
I know, right? 25,000 square foot office includes shared workspaces, panoramic views of the downtown Houston skyline, and state-of-the-art technology.
So, sticking with banks, right? Do you remember we covered Robinhood a few years back, about a year ago?
It feels like a year ago,
maybe less. But Robinhood is an investment app, right? And then they were going to create themselves and become a bank, and they totally messed it up. Well, they're going to try again, apparently. They've hired
yeah. Well, and they were unique because they offered free trades, right? You didn't pay anything to make a trade. But then I just saw that news that now, what is it? Is it Schwab? One of the big investment brokerages is now offering free trades as well. So like clearly Robinhood disrupted things.
And people want people don't want to pay to do the trades. I get it. So that was kind of a small thing.
Fidelity is doing free trades, and I think everybody else has moved to Match now. So like basically the world of trading, like commercial, like brokerages online, consumer brokerages online, like is all free now, which is crazy. More app news. Xero in the UK. Have you been following the numbers? I know we dug into them together when we got the annual reports from, I don't remember if it was Intuit or Xero, but we always like dig into those numbers, who's winning, right? Well, there was an article in Scoop Independent News out of New Zealand suggesting that Intuit may have overtaken Xero in the UK, which would be big news because Xero has just dominated in the UK, crushing Sage in the online world. And Intuit is a relative newcomer in the UK. Not very long, right? I mean, maybe a few years, David? I don't remember exactly.
And I think that was my understanding is that the UK market was still pretty much wide open.
Yeah.
It wasn't like US market, obviously. QuickBooks was much bigger than Xero here. And we've talked about these numbers in Australia, right? How big Xero is compared to QuickBooks, right? But the UK, my understanding, was always kind of a 50-50 race, and it looks like Intuit's pulled ahead.
Maybe. We're not totally sure because the dates on these reports are different.
That's the difficulty, I know, because Intuit reports out quarterly and Xero reports every 6 months. Yes.
So Intuit reported on July 31st that they had 545,000 subscribers in Britain. That's both small business and self-employed, up 78% from a year earlier. Xero's latest data is from March 31st, and they reported 463,000, which was up 48% from a year earlier. So depending on the relative growth rates right now, they may either be even or Intuit may have pulled ahead. It's possible. But basically the news here, the takeaway here is that like Xero shouldn't consider that they've got the UK locked because Intuit is doing strongly there.
So I have speaking of Europe, news.
All right.
So it's caught my eye because I've never really heard of them before. There's a company called Revolt, and it may not even be Revolt. It's REVOLUT. How would you say that, Blake?
REVLOUT.
Oh, OLUT.
Revolt? I don't know.
All right. So they're in a bid to raise 1.2 billion pounds and become Europe's most valuable fintech firm.
Really?
So the headline caught my eye. I was like, who are these people? Then I started looking at it a little bit, and it's similar to a Venmo or a PayPal type play. Right. Mm-hmm. But really what got interesting is deeper in their pay. Well, they're going to launch in the US soon. And they did a partnership with Visa, and they're going to create a virtual card of some type. And what's interesting is the deeper on their website, I saw they are doing payroll advances. So you can, if you're going to get paid on Friday, they'll stick money in your account on Wednesday. No fees. They'll just do it. Then you get access to your money 2 days early. So this is like beyond even, we talked about these companies like you get paid every day you work type of thing. Mm-hmm. This is like kind of taking it even beyond that a little bit, where you just get your whole paycheck 2 days early, which is very, very interesting that they're heading down that point. The one weird thing in the article was that apparently they've made a lot of changes in management because they've had some challenges to its reputation. So I'll read the quote. The changes come after serious challenges to its reputation, including alleged links to the Kremlin, which it denies, and claims that it had switched off an automated system preventing its money transfer system being used to violate international sanctions. Oh. So it's some they're going to launch in the US soon. The payroll thing's interesting. They're a competitor to PayPal, Venmo, but I think it's worth keeping an eye on these guys. I think we're going to hear more about them.
Yeah, sounds like they need to hire a PR firm. We'll keep an eye on it.
Cool. Yes.
Hey, well, we haven't talked about MyPayrollHR, but that still is going on, and we had a little bit of an update on that. So bizjournals.com, the Albany Business Review, had an update on MyPayrollHR. Apparently, the fallout from the MyPayrollHR payroll fraud continues to spread around the country. Multiple payroll companies with ties to man are apparently in trouble. Let's see. A few of those include Pro/Data Workforce Solutions in Gurnee, Illinois, and Southwestern Payroll Services in Tulsa, Oklahoma. Man-owned stakes in those companies, part ownership stakes, I should say. And while those payroll companies didn't see clients' direct deposits get withdrawn, their tax money has been frozen. Their customers' tax money has been frozen as part of the investigation into Man, which has led to huge tax issues for the companies and business owners who had their payroll taxes run through Cloud Payroll LLC, which is another company owned by Man under his parent company, ValueWise Corp. So apparently, Cloud Payroll LLC were they a software company or a payroll?
I think they may have been the tech stack that these other payroll companies were being ran on. Yeah.
So, for example, one of those businesses that's been affected is called Bridgeview Electric. They are out $23,000 in unpaid federal and state taxes that have been frozen as Pioneer Bank as part of the investigation. Pioneer Bank is the bank that was funding most of Michael Mann's businesses through loans, and they were the bank that he banked at. So, these customers, they still owe this money to the federal government, to the state government. So they got to pay it and then try to get their money back, hopefully. So that's all that I know about MyPayrollHR, unless anything else new has come up.
Just Pioneer Bank. So that's the bank that the money got transferred into and where the money's kind of sitting.
Yes.
Right. But
yes.
They're the one that gave out all the loans.
Yeah.
Right? So one thing that came out, they actually finally made a public statement 30 days later. Right. And it was, it was pretty generic. We, Pioneer Bank, are aware of the distress and the matter is caused, and we offer our sympathy. It's very kind of, they didn't really say much in that.
Yeah.
But then somebody actually asked them, was asked by a reporter, why did not respond to questions and why it took more than a month to release a statement, and why Pioneer even signed up for loans, and they just did not respond to those questions.
So 30 days to get a very basic response, and then no response to any follow-up questions.
But they released their 10K.
Oh.
And they basically are saying that they are going to be delayed in announcing their earnings. So they just went public this year, apparently. And they became a public company. They released their 10K. And I have a feeling, because the way they're saying is they have to review all these transactions. Mm-hmm. like they might have to keep going backwards. They might have to restate lots of things.
Oh, yeah.
I think the investigation's going to, like, this is not going to bode well for Pioneer, I think, as they realize the amount of fraud that's been committed against them as well.
Interesting.
So, and then the other ripple of that's related, the state of New York, the New York State Department of Financial Services sent subpoenas this week to 40 payroll processors that do business in the state.
Oh, yeah, because they're thinking about regulating payroll processors more.
Yeah. So they're going to, who knows what the context of these are, but people are going to have to start answering questions. Like, this is, the regulation's coming.
Well, and I think you had a very good point on one of our previous episodes, David, that there's a big hole in regulation when it comes to payroll processors in that apparently they don't have to segregate client funds and their own funds. And I can't believe that's possible. Like, in any other industry, like in the legal world, right? Client funds have to be held in a trust account that is a special account that your bank manages, that, you know, you can only put client funds in there in trust. And I just can't believe that payroll processors don't have to have trust accounts either. So I would very much expect that to happen. Hey, you want to hear some news about California, David?
California's in the news again.
Yeah. Well,
is it gig workers?
No. It's not about gig workers, although I have been talking to every single Uber driver that I get in the car with about their opinions on the new law that was signed into law by the governor, you know, making all the, well,
but this is like street, you're doing reporting in the field.
Yeah. Well, so it's interesting because I've gotten different opinions, right? Like one of my drivers he said basically like, yeah, Uber treats us like crap. And I'm happy for them to, you know, be forced to make me an employee because they don't respect us and, you know, all that stuff. He's like, they don't give us any control. And it's like, I don't feel like I'm not independent. He drives like all the time for Uber. But then at the same time, like there was this woman who gave me a ride in Atlanta, and like I just knew that if she had to be an employee, there's no way that Uber would ever have hired her. So like, you know, there's just disadvantages, I think, to this whole thing. But anyway, that's beside the point because it's just anecdotal. What I want to talk about is California's fiscal accounting project. Do you remember this, David, from a few months ago? This is the financial information system that California has been building.
Oh, yes.
Yeah. So California decided back in 2004, okay, which is 15 years ago, that we were going to build.
Still in high school.
Yes, this is like I have just like zits on my face, right? Like
free cloud accounting,
only
possibly, right?
Cloud accounting is only a glimmer in the eye of Rod Drury and the folks at Intuit, and right, like this has never even happened, right? California decided to build its own massive, basically ERP accounting system that would unify all of the departments and programs into a single accounting system. Started this 15 years ago. And the article in Government Technology, govtech.com, and I just love the fact that there's like a publication for everything now, right? So there's a govtech.com website, and the headline is California's Fiscal Accounting Project Tops 1 billion mark. You may remember that I reported on how we were getting close to that mark. Well, in September, we crossed that mark. It has now cost $1 billion for us to build this financial information system for the state of California, which still is not usable.
Well, so Sage bought Intact for 1.5 or 1.8 billion.
No, it was less than that. It was like 700 million, wasn't it?
So you know where I'm going with this, right? California could have just acquired an ERP startup, the whole entire thing, and be done with it.
Right. So Sage acquired Intact ERP for $850 million. I just looked it up.
Okay.
They could have bought a system that probably would be good enough. They could have bought the whole company for less than we've spent now. So the story is that the state of California just approved an additional $145 million, which brings the total on the project to $1.06 billion. They have also pushed the deadline, punted forward to July 2020. Basically, the problem is that a lot of the departments still aren't using it. There's no slack in the schedule either. Like, this is the thing in the article. It's like, it's going to fail because Here's the quote from the article. The Department of Technology's independent review called the new timeline, quote, aggressive, unquote, adding there is no slack to recover schedule if delays occur, while changing its status to green from red on the state's IT project tracker, indicating improvement. So they just pushed the deadline forward so they could change the status to green.
Lead the way, California. Continue, please.
Well,
isn't the train like completely, they stopped building it, right? Because it was going to be $10 trillion over budget.
Yeah, so the high-speed train from LA to San Francisco, apparently we are no longer planning there's no plans to actually connect it to LA or to San Francisco. So the current plan is just to build it in the middle of the state. It's going to connect like Fresno and not even Sacramento. It's literally farmland. And I don't know what the rationale is, but I think we're going to build it. And then once we've built it, people will want to extend it. Or maybe it's like a sunk cost thing. Like once we build it, people will say like, well, we got to finish it now. Right. So, just stuff that makes me proud to be an accountant living in the great state of California.
Jeepers. I don't know. What else do I have? Any other little small things? My goodness, it's so depressing. We got to get people excited about something.
Well, no, but
about how there's more billionaires in the U.S. paying lower taxes than the working class. We could talk about that.
Well, hey, let's just say that all of this government waste is balanced out, I hope, by all of the cool stuff that comes out of San Francisco, right? Like, hey, the company I work for. And all these other startups, Expensify, San Francisco based, Xero, US based. Well, they moved, but they used to be in San Francisco. So, but lots of good things coming out of California. Just we like to be extreme, I think, right? It's our nature.
So speaking of other extremes, I'm sure everybody saw the articles. It's kind of been everywhere about how there's now, for the first time in the history, the top 1% are paying a lower tax rate than the bottom 51% of Americans.
Right. But that's not quite accurate, is it?
Because I read it wrong?
Well, no, Kelly Erb said something on Twitter.
Oh, I did not see that.
Oh, yeah. So like she said, this is something the press gets wrong all the time, which is it's not that the tax rate is lower. It's that their effective tax rate is lower, right? Because the tax rate is progressive. So you pay more if you make more according to your tax rate. But like the total amount you might pay due to deductions and different rates that you pay may be lower. And it's like they just can't get this right. The press just can't get this right.
Yeah. So kind of on a related article, which I thought was actually a little bit more disturbing, is the ProPublica had an article about IRS audits.
Mm-hmm.
So basically the IRS, their headline is IRS, sorry, but it's just easier and cheaper to audit the poor. So just as many, so the same rate of people that are poor get audited as the wealthiest 1%.
Really?
And the justification is to audit somebody that's in the 1%, you need an army of people, you need a team, they all have to be highly skilled, it's just too complicated. So it's easier just to have agents audit poor people.
Is that what the IRS actually says? That's
Congressman is actually, a senator has actually acknowledged this. Yeah. And it's like, we have to give more money to the IRS to actually accomplish this.
Yeah. Well, and that's been the big problem with underfunding the IRS is that when there aren't enough auditors, we lose money due to tax avoidance, right? Improper tax avoidance. And it's basically giving a hidden tax break to corporations and wealthy individuals who can take really aggressive positions that maybe they shouldn't.
And the people that they assign to these auditing the rich, it just takes a lot longer, right?
Yeah.
It's harder to even complete the exam to do this, right? Yeah. And what happens is the attrition rate, the more experienced examiners just quit. They don't want to do it. So like this is a seriously broken process that the IRS, we talked about this before, the computer systems, like the IRS is horribly, horribly, horribly underfunded. And
this is something that comes as no surprise to any of our listeners who have to interact with the IRS, right? Trying to get a hold of them during busy season, right? It's like you wait on hold all day, even as a professional.
Yeah. And on that note, let's everybody welcome back from doing everybody else's taxes. Hopefully you're listening to this and it's the next day and you're kicking back with a brunch and listening.
So I got one last story before
one more.
we read the reviews. I wanted to end on like a fun note, right?
Okay.
So let's talk about our kids. maybe or may not be fun, depending on how well you get along with them, right? And let's talk about our kids and money. So, David, I'm curious to know, you have teenagers or preteens?
Getting there, yes.
You have preteens, younger kids. Anyway, kids who like ask you for money, I imagine. And
well, of course, they have to buy things in Fortnite.
So I'm curious to know, do you give your kids an allowance?
Not a straight up regular amount. No, I try to appease them to do something. And unfortunately, because of games like Fortnite and micropayments and video games, my kids want to do micro chores. So we'll do something for $1.50 here, $2 here. It's a total nightmare.
That's micro chores. I love that. There should be an app for it. Like, right? Like they want to make a purchase and then they send it to you, and then you have to like, it tells them what chore they have to do.
I should just tell them, take me out of the loop. This would be genius.
Yeah, exactly. Well, if you did give them allowance, how much would you give them every week each?
I think $5 a day, $25.
Okay.
It's good.
So you're in line with the average. Kids in the US get an average of $30 a week in allowance, according to a new AICPA study. And they are averaging, how much would you pay them, I should say, David, to do chores an hour?
How much do I want to pay them, or what do they try to negotiate me up to?
What do you think a fair rate is?
I think $5 to $7, and if they're good, I'll give them a little extra. But they push for minimum wage. Like my kids, unfortunately, I leave around Baker's book laying around. They start to understand this value game, and they want to charge for the value.
Well, you're tracking though with the average. Kids average $6.11 an hour to do chores, which is surprisingly up 38% from 2016. Now, you're in the minority, though, by not giving your kids an allowance. 2/3 of parents give their kids an allowance. And 4 out of 5 allowance providing parents, right, those who give their kids an allowance, expect their children to earn it. The funny thing about this press release from the AICPA is that, of course, they have to make something of it beyond just the stats. So the headline is, children's allowance pay is up, amount saved, alarmingly low. Which I think is really funny because and there's this whole section in the article about how children don't save their allowances, like that they spend it all pretty much. And I can find the stat here somewhere. It's not coming to mind right now, but
that's 100% true in my case.
Yeah. And I'm thinking to myself, like, seriously though, like, I mean, if I'm a kid getting an allowance, like the whole point of that thing is to spend it. And especially, actually, this shows how out of touch we are, because like all these kids now have access to micro transactions. So it's not like they save up for big things anymore, right? They're spending most of their money on little like $1 hats in Fortnite.
Yeah, exactly.
Right. Which for our listeners who like have never experienced this, and if you're not a gamer, like I like to game, there's this whole economy now in video games where you can actually get the game for free. Okay, you get a game that would like in the past would have cost you like $60, right? The developer will give it to you for free. I can download it for free, and I can play it for free. And the only way that they make money is I want like a different outfit than the other players in the game. I don't want to play like the basic default guy. I have to pay, anywhere from $1 to $10 for each item that I want to wear, or I have to somehow like earn it in the game, which is super tedious by playing for hours and hours, but it's much easier just to buy it. And it's like a small amount, right? Or at least to a kid, it's a small amount. So, I'll pay $1 for that hat that I can now wear in the game. And I have like now this cool custom character. Like that is our economy now. And it works. They make just bazillions of dollars from this.
At the detriment of parents everywhere. Yeah. And it's funny because Xander, and you've met my son Xander at the accounting salon before. So he went to a summer camp for art for a week this summer. Uh-huh. And they all had to submit like their pictures to some art show and they're for sale or something.
Yeah.
The teacher comes back. Every kid put theirs for sale for like $1, $2. $50 he put on his artwork.
Value pricing, man.
He's doing the math. Like he's like, I need $50. I want to buy like this loot box in Fortnite that costs like $14.95. Like it's pretty funny how the value is there, but the work ethic might not be. I don't know.
So you know what this is making me think is that there's an opportunity here, which is somebody needs to come up with the bookkeeping or accounting firm of the future that gives stuff to their clients for free, and then the clients just pay microtransactions to get to, and that's the whole business model. It's like, I'll do your bookkeeping for free, and then somehow you get them to pay you like $5 at a time or something like that.
Well, yeah, like how many days after the close do you want your profit and loss?
And you pay so like if you pay Xero, it's like 90 days after.
When you get around to it, they might get it.
But if you pay, a little bit more, then you get it 60 days. If you paid a little bit more, you get 30, then 15, then 5, then like I'll do it instantaneously for you, right? I like that.
We have an episode of micropayments, and QuickBooks and Zero could get into this. It's all dangerous. So we should probably jump into the reviews though, and thank everybody for listening.
Yeah, we got a bunch of reviews. Thank you so much. So let's jump in right now. You want to take the first one, David?
First review. This is on iTunes. Hooked. Hey guys, this is my second review. Still loving your podcast and can't stop listening. I live in Johannesburg, South Africa, and almost crashed my car when I heard you reading my review on your podcast earlier this week. I have one suggestion. Please update your music intro. It's really not cool enough for the cloud.
Oh, man.
My son can create a soundtrack for you if you would look. He's 15 years old and does music production in his spare time and has a great ear for music. Send me a message on LinkedIn. I've connected with you both. Mike Powell.
Oh, Mike, that is actually something that's been on my mind. And we just played around with a new intro, although David wasn't too into it because it was kind of like, how did you describe it, David?
It was like Sedona, Arizona, hippy dippy crystals and stuff.
But we haven't really spent a lot of time into it. So we gotta figure out something that's like more appropriate. But yeah, honestly,
what if we let our listeners send us a track every episode?
Or we should have a contest, or like they could vote or something. I don't know.
True.
But to be honest, Mike, the music that you hear is totally free music that I downloaded from Wistia that they gave away for free as some marketing promo, and that's why sometimes people hear it on YouTube as the backing for commercials and stuff. So we have to change it because it's getting embarrassing. So thank you for that.
Blake's a musician though, so there's no excuse for this.
I know I should play something on my cello. All right, next review. 5 stars. Thank you, Blake and David, for the amazingly well thought out podcast. I am a partner in a brick and mortar CPA firm and now have a renewed vision of what our firm can become. We have been in the cloud for 3 years now, and the information you guys provide is invaluable to us. Rachel Cooner, CPA, Longview, Texas. That is so awesome to hear, Rachel. That's like my purpose for existing when it comes to this podcast.
Warms my heart a little bit, for sure. Another 5-star review. In my top 5, time is limited and there are so many good podcasts these days. I like how Blake and David relate tech and innovation to the accounting industry. It's right up there with Bloomberg and The Daily.
Wow, high praise.
And that's from Always Lost Amy on Apple Podcast.
And we've got a review from David Nadardo. David Nadardo. DiNardo. I'm so sorry, David.
DiNardo.
It's very late. Amazing podcast. Hey guys, I just want to share that you guys are doing an amazing thing. Education and bringing to light the latest news in cloud accounting across North America. I am from Ottawa, Ontario, Canada, and my firm is called Envolta Cloud Accounting. We are 35 employees working remotely all across Canada. Navigating through the online tools and news becomes overwhelming. I love how you guys are building a community and sharing different perspectives. Keep growing and spreading the news. Moving online was the best thing we have ever done, and now we are top 61 growth company in Canada. Look forward to seeing you guys at events. David DiNardo, owner. Awesome. Thank you. Thank you, David, so much. And I really apologize for butchering your name. We're recording late on a Monday due to scheduling conflicts. So I blame the timing.
All right. One last review. This is 5-star. This one was on Podchaser. And it's just an acronym for a name. It's EGLYMPH. Eagle Eye Mymph?
Egly
I don't know.
Egly
Egly Mymph. Okay. David and Blake are awesome! Exclamation point. I own a fractional CFO company that is taking a modern approach to financial understanding for business owners. Staying on top of the latest trends and technologies is what I need because it's what my clients expect from me and my team at Edge Business Planning. David and Blake provide me with all the news and info I need to know to stay on top of what's going on in cloud accounting. Most importantly, they provide insights and analysis that really gets me thinking about where I want to take my company. I actually get excited when I see a new episode pop up. Thanks, guys.
Wow. These are amazing reviews, and that feedback is what keeps me going, honestly, in doing this every week. It's so great. And thank you everyone who left a review. If you want to leave us a review, head over to Apple Podcasts, leave a review there, or you can check out podchaser.com and leave us a review on Podchaser. It's like the IMDb for podcasts, and we really love what they're doing. And those reviews go out to a bunch of different players, and you're welcome to use either.
And a few other things. Next week, we're going to be at Sage Intacct Advantage.
We'll be at Intacct Advantage in Las Vegas. Yeah.
A week after that, we're going to be in Atlanta for Acuity. So Acuity is a virtual accounting firm. They're bringing all 60 of their employees on site, and we're going to go make an appearance there.
Yep. They're calling it AcuityCon. It's like their own. AcuityCon. I mean, if you didn't get enough of XeroCon or QB Connect, like if you work for a firm like this, you could have your own conference. So this
is exciting.
I think we're going to do a live episode there, right? That's the plan.
I think so. We're going to try to. Yep.
We're going to try.
And then after that, we will be going to QuickBooks Connect. We're trying to get all the details wrapped up for that. So we'll see everybody at that event. So it's a busy 3 weeks coming up. And then side announcement, we have a merch store coming very soon. Some limited edition t-shirts. So let's use that out there a little.
I'm looking forward to that. You've come up with some great designs, David. And so, people can go online and get shirts. And one more event I'll be at is Digital CPA Conference in December in Seattle. Not the greatest time of year to have a conference in Seattle, but I do love Seattle. So I'm
maybe I have to fit that into my schedule as well.
Yeah. I'll be there with Jirav, and maybe, David, you can come out and we'll do some podcasting too.
We'll figure it out. All right, everybody, that's a wrap.
Thanks so much, everyone, for listening, and have a great week.
Bye.
Bye.